Following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. The Trader's Edge. Now, Steve Rhodes.
Good afternoon, folks. Welcome to the November 22nd, the magical Monday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Hey, let's make sure we have an extraordinary one. And the easiest way to do that is to always remember that life is happening for us, not to us. That's right. When you and I make that one little 2x4 shift whale, it means we can find the gift in every set of circumstance that life is going to toss at us. Now, today, you and I, we're going to go check on the circumstance of these markets. We'll go figure out what those bulls and bears, what those buyers and sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know I'm absolutely grateful for your presence here. But more important than that, that's this. During this next 60 minutes, I'm here to serve you. So feel free to pick up that phone. You can dial on it at 877-927-6648. If you can't dial it, we've got you covered there too. Go ahead, let those fingers do the walking. Go ahead, send me an email. Send it to Steve at TFNN.com. And inside that subject heading, please put radio show question. And in our Tiger's Den, well, any and every ping will do. So let's go ahead and get this show started on Magical Monday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to Les Show. Right now, mixed bag out here. The Dow's up 200, S&P's up 15, NASDAQ 100 off 64, Russell's down 1, Semi's off 32, Tranny's up 304 points, New York Stock Exchange 48. We're all over the board. Gold's off $45, silver's down 52 cents. Light sweet crude is up 50 pennies, trading at 76.43. Leading the charge dollar-wise, the upside, you've got Tesla, $33, nearly 3%. Bionatech is up 25. That's nearly 9%. SVB Financial, about 3% or 22. Moderna is up 20. That's 7.5%. Avis is up 19. That's up nearly 7%. To the downside, Shopify down $98, nearly 6%. Amazon 94, 2.5%. Mercado Libre 79 or 6%. ePay Assist off 7.5%, $50. HubSpot down 43. So we've got some movers and we've got some shakers out there. But where are we going to begin our day? I'll tell you where we're going to begin our day. We don't usually do this. When we do this, we typically wait for the 2 p.m. update. We go take a look at the indices, but I feel compelled to go take a look at them with you right now. So give me a moment as we change screens here so you can get my ugly mug off the screen here and look at something more beautiful. That would be these charts here. So we're going to begin by taking a look at the Dow. So looking for signals here. So if we take a look at the Dow Jones Industrials, this is cash indice we're taking a look at, forms a TD9 count top, bar number 8, and price on Friday pulls basically all the way back to its breakout level. Did it hit it right to the tick? No. 35,545 is the number. Price on Friday got down to a low of 35,555. 10 buckaroonies on a $30,000 instrument. Yeah, that's basically holding support. So that makes sense. Okay, look, and actually there's an A to B equals CD to the downside. If we were to get a bullish reversal candle inside the Dow, we don't have that as we speak right now. We just have an inside bar. That would generate a Gartley buy pattern at TD9 breakout support. So that would be a bullish message. The S&P says, I don't know what you bulls are talking about here. I'm moving higher. I'm just below the oscillator and change line. I still have your TD9 count and Rhodes Momentum Indicator top that is still in place out here. So it still has its topping pattern. Hey, the Dow has its topping pattern, just the price is pulled back to support, but it doesn't have that confirmed buy the D point. It does not have a confirmed Gartley buy point. I want to make sure I'm clear about that. It just doesn't have that yet. We need that bullish reversal candle. So in jeopardy, the Dow would be that 35,545 level. I would most certainly be watching it. Not necessarily today, could be today, but I would be watching that. Now, the S&P 500 still has its two tops in place, and that with the spot volatility being above the 50-day exponential moving average says, is this a bull trap out here? And I didn't say bull crap. I said bull trap out there. And at this stage here, I've got to say that's a real possibility. And why is that a real possibility? Well, when we take a look at the NDX 100, what we see here is that this, you can see the Rhodes Momentum Indicator signal. Those are the black diagonal lines. And today, so far, is a bearish reversal candle. But as I mentioned, when we looked at the NQ, we've got either a bearish reversal, perhaps a bearish engulfing candle, or you could use a key reversal bar, assuming that price closes one tick below the open. But what hasn't happened out here, and what we would need to see in order to say, okay, we're going to see another thrust lower, even though we're in a favorable seasonal cycle, we would need to see it close below that green oscillator and change line. That's at 16,447. The low so far today has been 16,460. It's close enough for me right now that it's held, but it closed below that level, says, okay, we may have trouble in River City. You can see the Russell 2000 drawn in there. In essence, are two lines, those two lines representing the A to B level, then the C to D area. So there's an A to B equals C to D pattern to the downside. That the Russell 2000 itself would confirm a Gartley buy if there was a bullish reversal candle. Now, in the case of the Russell 2000, and this is unique. So we've got really unique messages out here. I don't know where price is going to stop, but the high from Friday has been exceeded. The low from Friday, which was at, what was it? 234,160. We've gotten to 2336. Yeah. So we're talking about key reversal bars up at the top for the NQ, potentially. And now we're looking at a key reversal bar, the bullish version, for the Russell 2000. And as long as price closes one tick above where it opens, you would have that by the D point. Would I do it? No, I would need, no, I wouldn't. I don't think I would. Not at 112 in the afternoon with the information I'm looking at out here. I'd want to see the Dow join in on that fun, and it hasn't just yet. But interesting stock patterns out here. The semiconductor index. It also has a Rhodes momentum indicator signal, so very much like the NDX 100. So really, it's the NDX and the semis that we want to pay attention to. Now, the semis are stronger than the NDX 100, stronger from the standpoint that they've further away from that green oscillator and change line. The level they would need to close below to signal some type of short-term top or some type of top out here would be a close below 38.56. Now, it might be 38.55 if price were to move lower, but use that as your general ballpark range out here. Now, the Dow Jones transports have had a nice move today. But where they run into resistance at that oscillator and change line, they're currently up 323 points. But until price closes above that green line, it could just be counter trend move to the upside. There you're looking at the spot volatility index. You can see that blue line at 1762 is the 50-day level with price above that. That's always a potential stinker for the S&P 500, the ES Mini out here. The XAU gapping down this morning. It's got a TD9 count top as well. It may be headed back to 130.32. That would be the TD9 breakout level. So normally we don't start here, take a look at the indices, but in this case we should. In fact, one other index that I'll throw over here is the U.S. dollar index. So today is going to be a completion of a TD9 count top. It is not on bar number 9. It is not on bar number 8. It is in the bar following bar number 9. So whatever today's high is inside the U.S. dollar index, for those of you that track that, pay attention to it tomorrow, the next day. If price closes above today's high, whatever that is, that tells us about a strong momentum move to the upside. Otherwise, what we're looking at is a potential for a short-term topping signal inside the U.S. dollar index. Okay, so the indices helpful to us to look at. What else should we look at? Well, another place to look. I'm not going to go there. Yeah, because we're going to a break, and I don't need to fill your head with other useful information that really might not be that useful. I'm not going to do that. But Steve Rhodes with TFNN. We get back from this break. I'll see if there's any questions out here. If not, we'll continue down this process of what do we look at to see if there is going to be some type of short-term top. We'll be right back.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
What's separating you from the most successful men and women on Wall Street? That's right, information. Having all the information gives us the perspective we need to place the right trades at the right time. The TAS Profile Scanner is the premier market profile-based scanner. Powered by its acclaimed TAS proprietary algorithms, this feature-rich scanner instantly filters over 2,500-plus global financial markets, such as stocks, ETFs, commodities, futures, and Forex. This powerful suite of tools leverages instant trade filtering and strategy formulation to show you emerging trades before they happen. For a limited time, you can save $100 off your first month by using the promo code UPGRADE, and you still get a 30-day money-back guarantee, so you have nothing to risk. Level the playing field with the TAS Profile Scanner, which you can find under the Services tab at TFNN.com. Sign up today.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Let's get to our first question. This one coming from Eddie in Boca Raton, Florida. Eddie goes on to say, I'm holding oil via OIH, UCO, and MRO. What's your opinion of oil? Would you recommend taking some profits off the table? So each of those instruments are directionally correlated to light sweet crude. So let's just go ahead and focus on light sweet crude. Those are the charts, Eddie, that are up on our screen right now. And so we'll just start here with the bigger view. You've got the daily in the upper left, weekly upper right. Lower left is monthly. Lower right is the quarterly time frame chart. So what do we know about light sweet crude? First, we know that price was hitting resistance, which was up at the 84.86 level. That was a monthly swing point. It was a monthly bearish engulfing candle as well from back in October of 2018, 84.86. And we can see how that level's acted as resistance. As that was hitting that resistance level, we had on the daily time frame, we had price forming some new profiles out here. We had price really consolidating with inside the weekly profile as well. So, Eddie, your question is, should you sell right now? If you were to see a close in light sweet crude below 75.97, we're at 76.47, that would be an indication of one possibility to say yes to answer that question out here. But right now, even though we've got price on a daily basis below the bottom of its profile, when we see that, we go to the next larger time frame. That's the weekly, to look for, see if there's any levels of support. And the answer is there is, and that's at that level of 75.97. So since you've held it this long and we're already back at support, when I say this long, from the top of that profile down to the bottom, I can't recommend that you sell, although, I mean, you should have stops in place. You should have figured out what your stops are and so forth. So, but do I have a reason to say go short light sweet crude as an example? And the answer there is no, not with the support level holding. And also, there's an A to B equals CD to the downside that I see inside of light sweet crude, that if you did get a bullish reversal candle, that A point that I would start with here would be the high from November 10th. The B point that I would use, just a small A to B equals CD. The low from November 11th, or November 1st, I'm sorry. And the following trading session would be the C point. I don't know why I'm having trouble with my cursor, but I am. There we go. So you can see it's hit the 1-to-1 area, but no bullish reversal candle. But if you were to get a bullish reversal candle, you still could get that today. You would then have a Gartley buy pattern with price on the weekly time frame coming down to a level of support. So remember, when we get a bottoming type, potential bottoming pattern, in this case here the weekly, I say bottoming pattern. Bottom just simply because price is at support. We like to go take a look at those other time frames. In this case here, we'll go to daily, and then we go to some intraday charts to look for some type of bottoming signals. Well, you've got the A to B equals CD. No bottoming pattern just yet. That needs a bullish reversal candle. With regard to the monthly time frame support on any, so if the weekly chart were to close below 75.97, bottom of that weekly profile, then the next area target to the downside would be 68.61. And so then we would definitely say, yeah, that would be a reason to sell out here. So let's go switch over to our other charts, the ones that have got the intraday signals, just so we follow through with this thought process here. So we talked about it now also on the daily time frame chart. Eddie, today's going to become bar number 7. The TD9 breakout level is 74.25. So you could get a TD9. So we talked about the A to B equals CD. You could get a TD9 count bottom between tomorrow and Thursday out there. Preferably, you would see that pattern complete above 74.25. Then you would have another bottom. So there's another reason to say, hey, maybe not so fast on pulling the trigger to sell. If you look at the very bottom panel of charts, let me take this 30-minute chart and move it over a bit here. Now we can see that all 4 of the equity future contracts for light sweet crude have bottoming signals. The 30-minute charts they all have Rhodes Momentum Indicator bottoms out there. What hasn't happened, well, I take that back. In the 30-minute chart, you had that pattern form. Prices above its breakout level of 76.03. So I don't have the reasons, or we don't have the reason, we take a look at these charts out here, to suggest that you sell. But like always, have some type of stop in place on each of those instruments. The preferred stop would probably be somewhere around the average true range of the last 10 days. Multiply that times 1.272 or 1.618. Less, today's close as an example. At least just have something in place in case something went to heck in a handbasket out there. And so, Eddie, I hope that helps you out. Thanks so much for writing in. You're the only winner chicken dinner. No other requests thus far. So with that being said, what do we want to go take a look at? Well, I think we probably should go take a look at gold. Go dive into Goldilocks. So to do that, let's stay with, let's switch panels. A moment here. We'll go back to the black background screens. We're going to switch back and forth out here. But on the black panels, what we want to take a look at is what? Now, that's the U.S. dollar. I didn't really want to do that. I wanted to, was it this chart? No, that's silver. Where'd Stevie put it? There we go. So here now, we take a look at gold. We've got our 4 different time frames. Now, I'm using my synthetic version of the contract out here. So, but here we have the daily, weekly, monthly, and quarterly, just like we did when we took a look at light sweet crude. So there's a new profile, well, formed last week. The price right now is testing the bottom of that profile, and that's at 18.16. If price closes below 18.16 today, we're at 18.11. A key level of support will have failed. What does that then signal to you and I? That signals that price would likely go target that little rising trend line. You can see a couple different rising trend lines. Again, we're looking at the left-hand panel chart out here for gold. So I would say price would target those areas. Where are those areas? Well, if I just take a look at maybe tomorrow, it would be at about 17.82. We're trading at 18.10 right now. So that would be one possible area of support. But then when we go take a look at the weekly time frame, the weekly time frame shows that this is a bullish structured profile. So we have 1782 in a trend line area for the daily, and we have a bullish structured profile between 1777 and 1793. So at this stage of the game, as of 1:24 in the afternoon, it looks like that's where gold is going to target. Now it can take those levels out, but it looks like that's where it's likely headed to. If I look at the monthly and the quarterly time frame, nothing here really that's providing me with a ton of information. So let's go take a look at that 8-panel set of charts out here. So this set of charts here says, Stevie, looks like that 1777, 1793 is a likely target to the downside out here. Now let's go take a look at those multi-time frame charts and see if there's any other signals here. So what are the signals? The weekly chart shows a oscillator and change line that's at about 1801. So that could be or should be a support level. So if price closes below that 1801 area, that's really signaling to us that 1777, 1793 area. Okay, so that's helpful to us. Price is back inside its consolidation. If you look at the daily time frame chart, you'll see a little black outlined rectangle. Price is back inside there. Says it could be a false breakout to the upside, so that's a possibility. The breakout level on a daily time frame, remember this formed a TD9 count top. Its actual breakout level, where price should pull back to, would be 1769. So now we're at 1769, 1777, 1793. That is the range. And that range becomes more likely with a close below 1801. We're not there just yet, but that would be the level to be watching. On a short-term basis out here, if we're looking for any kind of bottom signals, they're just simply not there. We don't have any bottom signals. If anything, the 60-minute time frame, as we came into the 1 o'clock time frame, negated its TD9 count. So there's nothing good here. There's no support levels. And so this suggests that we could see gold continue to move lower. And that's going all the way down to a 30-minute time frame chart out there. So I hope that helps you out with regard to gold. I'm sure that many were interested. And Steve Rhodes with TFNN. We'll be back in just a few. Danny has a question. He's got the TQQQ. I believe that's the long. Is that correct? TQQ, you've got puts in it. Anyway, Steve Rhodes with TFNN. We'll come back. We'll take a look at where the NQ is likely headed to.
Are you having fun trading the markets, but having trouble finding like-minded individuals to discuss your trading and investment ideas with? Become an apex predator in the trading markets and join the Tiger's Den Trading Room only at TFNN.com. The Tiger's Den is an exclusive trading room where successful traders from around the world come to exchange trades and ideas. Join the den and surround yourself with the sharpest minds in the trading world. Subscribers to the Tiger's Den are also the first to have their questions answered live on air and can privately chat with our TFNN hosts live during their shows. Interact with other Tigers and Tigresses as they share trading ideas, news analysis, and discuss the market action all trading day. Subscribe to the Tiger's Den risk-free with our 30-day money-back guarantee and become part of the TFNN trading community. TFNN, educating investors.
You could be making money off the stock market. And if you're already making money off the stock market, you could be making a lot more. Check out TFNN and Tiger TV and get expert investing advice to give you the power to control your financial future. Go to TFNN.com and find the newsletter for you. Whether you're into trading gold, metals, futures, currencies, or options, you'll get advice and analysis to help you seriously get ahead. TFNN also features trading services with a 30-day money-back guarantee for new subscribers, as well as TFNN's Tiger Den Trading Room, trading software, and educational webinars for all trading levels. And make sure you check out Tiger TV for free on TFNN.com or TFNN's YouTube channel for live financial content from 8:30 a.m. to 4 p.m. Eastern on market days. Stop watching on the sidelines while other people get rich and become the investor you were born to be. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. So Dan in New York wants to take a look at the NQ. He's short the NQ out here and just trying to get a handle on things. So we begin here, Dan, just taking a look at our 4 equity future contracts out here to see what the messages are. So we know that each of them have a consolidation breakout that's in play. The pullback so far inside the Russell 2000 and the Dow have been nothing more than a retest of those consolidation levels. As long as those hold, they're signaling to you and I that price wants to move up to their measured move areas, which are in the Dow is about 37,360, in the Russell 2000 about 2578. Now the NQ, that's in the upper left, is well on its way. In fact, you can almost make the argument that today is maybe close enough for that consolidation measure move. It hasn't hit it exactly. 16,928 would be the level we've gotten up to the 16,767 area. But it is getting close to that level where I can see why you would consider that. Today's key reversal bar could be a reason to also consider being short the Qs out there. So we're just going to go through this here methodically. Now, one of those methodic things are, and I'm going to get this fired up here momentarily, is trying to understand what our market breadth is, Dan, for the NASDAQ 100. So I'm getting that here fired up. We want to see the 4 different time frames that are easy for me to track. So as soon as that pops up here, which should be momentarily, we'll go take a look at that. No, I don't want to do this. Get to the dashboard. We can pull this over. Give just a moment here. I'm just going to pull this over to a different screen, the screen that we're on. And whoops, what did I do there? Oh, my. Okay, there we go. So here we're going to do this. So the question is now a good time to be short the NASDAQ? Well, we want to understand market breadth. So you've got a bearish crossover. It's in the red zone dial on the 60-minute. It's in the red zone dial on the 240. It's in the red zone dial on the daily. So let's just pull the daily time frame chart up. Let's expand this out. And you can see the crossover. What does that mean, a crossover? What that means is at present, there are 32 instruments trading above the top of their daily profiles. That, in essence, generally speaking, would be considered to be bullish. Whereas there are 38 instruments trading below the bottom. So the preponderance of evidence is pushing lower. And now sometimes you get these crossovers, and of course, the day's not over. This is a daily chart. It can be dangerous to read the meeting at 132 because that meeting can be completely different at 4. But right now, Danny, we want to go ahead and take a look at what's the current meeting. So right now, the current meeting is, okay, that supports the idea of being short. So we've covered that. We've got that key reversal bar. We know we've covered that. Let me get rid of this here altogether. I don't need it. I don't want to save this. No. Maybe I should have said yes. Sorry. Are you sure I want to close? Yes, I want to close the application. Okay. So now what are we going to go to next? The next thing that we're going to do out here is we're going to go take a look at what's going on the multiple time frames. So as we switch over to the white background charts, the monthly chart says it's uber bullish because price has negated on a monthly basis, has negated its TD9 count top. So this says, hey, the move that we're seeing here, or that consolidation measured move, that's just kind of a part of the noise and the patterns that are out there. But this suggests that the NQ has much, much higher to go. Of course, we're talking about right here, right now for Dan in New York. The weekly chart, not seeing any kind of a topping signal there. So whatever you're in could be short-lived. Just want to point that out to you. And there's the daily time frame. So there, the daily time frame, this is where it gets dangerous. Dangerous from the standpoint that what the market has proven to us right now is that it's still bullish. Do we have a confirmed Rhodes momentum indicator top as we speak? Yes. Even if it doesn't produce a bearish reversal candle, just one tick of a close below the open would give you that bearish reversal candle, that key reversal session. In a key reversal session, folks, you have to have 3 things. You have to be in a stretched environment. Well, we're getting a stretched environment when my signal fires off for sure, but we're in that anyway. The high and low of the prior bar has to be exceeded or deseated, or whatever the word would be to the downside. Well, that's taking place. And then you need that one tick close in the opposite direction of the trend out there. So as of 134, we've got that. But what we don't have out here, and here's where the danger comes in, Dan, and I wish I had the crystal ball to tell you how this was going to turn out. That's why we go take a look at those short-term time frame charts and just try to get some type of probability mechanism to help us assist with our diagnosis out here. But this is a dangerous thing, because until price closes below that green line of 16,453, this could really be a false signal. And that's where, when we first began the show, I was looking at the potential Gartley buy patterns in the Dow and inside the Russell 2000. And if those were to form, I would say this would really be a false flag out here. But I get what you're looking at. When we take a look at market breadth, it supports this. It's just that what the market breadth doesn't know, that you and I do know now, is that oscillator and change line effectively has been tested and rejected. And that keeps things in, at a minimum, a bullish to neutral position, not a bearish position out here. And remember, the daily or the weekly and the monthly charts, they are also bullish. Now, if we take a look at the intraday charts out here, you've got a 30-minute chart. What do we know about the 30-minute chart? Big, nice TD9 count top. Price broke through two breakout levels of support, 16,568 being the most recent one. But what's transpired over the last hour or so out here, Dan, is that oscillator and change line changed from green to red. And you know as well as I do that when that changes colors, we anticipate that price net line are going to catch up to each other. What you're looking for here, not necessarily reason to sell, but I do hope you are, if you're short the Qs, that you've got the NQ charts and you can look at this time frame and that you can figure out where that oscillator and change line is that if price just tests and rejects that because it's a red oscillator and change line, that's what you're looking for. If price were to close above it, which would be about 16,600, I would guess at this stage here, if price were to close above that level, well, then that's saying a further rally would be likely. Where would that further rally? Just go to the 60-minute, then the 120, then the 240. Well, the 60 would say the further rally about 16,611 or higher, 16,642. The 120 would say, well, right now it's saying 16,582. If you get above that, that says all the way to 16,646. The 240-minute chart, price pulled all the way back, TD9 count top, found support at its breakout level of 16,508. That's a bullish signal, not a bearish signal. In other words, a key level of support has held. So it's really, as I said to subscribers this morning when we take a look at the equity markets out here, quite frankly, I was confused. The chart signals to us are confusing out there. So that's the most information I can provide to you. I would have to say, I don't know what else I can provide to you other than, that daily time frame oscillator and change line is really key to your short position out here, 16,454. So manage the trade accordingly. I hope that helps you out. And thanks so much for writing in. Now, another thing, to kind of just general with regard to the markets out here, and again, another potential confusion point is if I go take a look at, we're going to go take a look at it. Let me just get the screen back to the black charts out here, is the New York Stock Exchange. So we don't talk about the New York Stock Exchange too often out here, but but here's what we're looking at. Last Friday, the advanced decline oscillator, that's the difference between the 39 and 19 period exponential moving average of the advanced decline line, daily advanced decline line. That advanced decline oscillator went down below minus 150, closed below minus 150. That is in the extreme oversold reading territory. That is where bottoms or bounces take place. Well, we've seen the bounce so far, somewhat muted out here. But if you take a look at other bottoms inside the market, just watch my cursor as I get back to that minus 150 level, such as September 20th, 2021. That was a bottom. Come back here to the level in August 20th, 21. That turned August 19th, that is. So each time that advanced decline oscillator has gotten down to that minus 150 level, what we've actually seen out here is a bottom. So I hope that helps you out, Dan from New York. Overall markets, the NQ, your key level, 16,453 or so. Steve Rhodes with TFNN. We'll be right back.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foresight Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. A couple of questions that we have in the queue here. One was from the Tiger's Den. Even though Mr. Bill says I've answered his question, it was, could I touch on the global movement of capital with the Dow being down, the S&P being up? So here we take a look at this set of charts. So this set of charts here, it's not really a chart, this set of data shows several instruments, a dozen of them or so, more than a dozen, and takes a look at how they're trading in all the major currencies. So we've got the U.S. dollar, then we've got the euro, the yen, and the pound out there. So we've got the 4 major currencies across the globe. And what we want to do is we understand how are these instruments trading in each of those currencies out there, because what you're looking for are instruments that are breaking out in all currency levels. Well, the Dow is up 19%. Generally speaking, we're in week number 47 since the bottom out here. This doesn't start right to the day. But about 19% to the upside for the year so far with the Dow. Now, that's priced in dollars, but 29% if you're holding euros. So that way it takes advantage of taking a look at the deflation, the inflation, the currency deflation here with regard to the euro out there. But nonetheless, you're paying attention to how is an instrument trading in your local currency. And the Dow certainly is leading the charge out here. Now the S&P is up 26%. Did I change that? Rate of change? Yeah, I think I did. Let me just make sure here. It looks like I got rid of a column. I just want to make sure that my math is correct. I thought that I had changed that this morning. Just want to make sure. I think that it is, 47. So, 26% for the year. Now, with regard to just trying to understand where's capital finding confidence, that's really what it's all about here. And that's another thing that really, quite frankly, Dan from New York has to take into consideration. Mr. Bill, and a reason for me to keep this up here, even though in your mind this answered your question out here. But the DAX has got capital flowing to it. So there's some confidence in the DAX out there. So let's assume you're a trader in Europe. You're trading in euros. That's your primary core. And you're trying to figure out where do you have confidence. So it looks like the Europeans have got some confidence, either the FTSE or the DAX. Somebody have to go take a look at the other instruments out there. But those guys are talking about lockdowns and all kinds of stuff out there for that. So I don't see that playing out well. And when that does crater, should it crater, Germany that is, then what we would likely be looking at is a flow of capital here to the U.S. But that's Stevie's mind working. I can't point you to anything specific there, but that's my thinking here as to what we're seeing play out. We take a look at the Shanghai, 3% for the year. Gold's down 5% for the year. The Nikkei is up 8% for the year. The Hang Seng down 8%. Australia up 11%. Emerging markets off 2%. So, there's still this confidence inside of the U.S. out there. That's what this chart here really kind of puts things. Whoop, that's not the chart. Was it this one? Yeah. No, wasn't that chart. It's this chart here. It's one. This is global flow. I thought I grabbed that. No, I didn't. Okay. So here we can see the U.S. dollar index is moving higher. Now I know that just by certainly looking at the top chart here, because that's the euro. And you can see that this has really been in a steady decline since 2008. It's a similar phenomenon to what we saw back in 1995 all the way down to 2000. When we formed a top, people called it the dot-com bubble. It had to do with global flow of capital. That was the big thing that was out here. And that's the same thing that we're likely to see go on this time around too. Likely to see it, but we're going to take things one step at a time. But at this stage here, the global flow of capital is alive and well inside of the U.S. out there. So thanks so much for the question, Mr. Bill. And I hope that helps out Dan from New York as well. We've got a question that has come in from Hector and the fuel injectors. And Hector wants to take a look at NVIDIA. So we're going to change charts out here. Going to go to our 8-panel chart to help everybody with regard to NVIDIA. And the question from Hector goes like this. Happy Marvelous Monday. Back at you, my friend. NVIDIA, intraday shakeout of wimpy chickens back to the henhouse. There you go. Where do you have intraday OUL resistance and support? Out here, Hector and Patty, the Santa Claus rally team. I love it. Okay, so let's take a look at NVIDIA. The very first thing, you're talking about the morning push lower. And what was that little shakeout? In order for it to have any really significant meaning, I believe, Hector, we would need to see some key levels of support fail. Now, I've got a 15-minute chart. It's in the upper right-hand side out there. I don't necessarily use that as key levels. Of course, when that key level begins to break, if the 30-minute does next, and then the 65-minute, and then the 130, well, then that's a whole different scenario. But when we take a look at the shakeout level that NVIDIA would have to close below to say there may be some trouble out here, I'd go with the 30-minute time frame chart, which is at 316.07. The 65-minute is at 319.05 out there. And so those would be the two areas that I'd be watching. The 65-minute has a TD9 count top and a Rhodes momentum indicator signal. So we're going to say that is more important than even the 30-minute chart right now because of its topping pattern. So a close below 319.05 would say, hey, okay, expect lower price. Lower price to where? Great question. We would say 316.02. How'd you come up with that so quickly, Stevie? I just looked at the daily time frame chart, and I looked for the oscillator and change line, which happens to be right at about the top of that daily profile. So that's a key area of support, Hector. And if price were to close, well, if price were to get back to that level today, you could have a key reversal bar. You could have a bearish reversal candle. We don't right now. And so this suggests a move higher. Now, the move higher is supported by the weekly time frame chart, only in bar number 6 of a TD9 count, a Rhodes momentum indicator signal trigger, but no bearish reversal candle. And the reason to suggest some caution as we come into the end of the year is this is going to become bar number 8. We do know that on bar number 9, or it could be bar number 8, 9, or the bar following 9, that NVIDIA could be topping between now and January sometime out here. Boy, Steve, what a great, thanks for giving me that advice. Can you be a little bit more general? Well, no, that's as specific as I can actually be with regard to the monthly time frame. And that's why we just step back and say, okay, I get that on the monthly. What's the weekly showing us? Weekly says higher price. Daily says, hey, still higher price unless we get some other type of signal. And the intraday charts are saying no damage has been done thus far. So your question was, where do you have intraday resistance and support? I think we've identified the support level, and that's being, we're going to go with that 319.05, but you could stretch it to 316.07, 316.02, right in that range. That's what I would be watching for, Hector. As long as those levels hold, then everything should be hunky-dory for NVIDIA. So thanks so much for writing in, and let's go to our next question. Our next question was from Rose, so I'm going to have to switch charts, I believe, to do that. Just because it could take a while to populate this set of charts out here. So give me a moment. Let's go back to the black background screens. I also have to change my panels and what Rose's question, she's not on the phone. She did call in. And thank you for calling in, Rose. Much appreciated. She wanted to take a look at CXI. So let me get to our 3 time frame, black background charts, E-signal charts, and pull up CXI. And CXI is not a clue. I don't have a CXI. Am I misreading this? What'd you guys type in there? CXL, maybe? What's that? Is that, I'm going to see if there's a CXL. CX. I'm not good at reading minds. So if there's no CXL, which there's not. So that's a problem. So Rose, I don't know how to help you unless the guys in the studio can figure out what that symbol is supposed to be. Was it just CX? Is there just a CX? I don't even know if there's just a CX. So I hate to be guessing out here. Whoops. CX. We're going to a break. So Rose, we're going to a break. CMX would be CX, but I don't know if that's what you're calling about. Call back in. Give the proper symbol to the guys in the production department, and we'll close out the show. Take a look at that for you. If not, we'll look at that perhaps tomorrow. Steve Rhodes with TFNN. We'll be right back to close out the show.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Are you looking for a secured investment which pays you on a monthly basis? The Tiger First Mortgage Program may be the program for you. The best rate on a 5-year CD in the country right now, according to Bankrate.com, is paying 1% per year or $1,000 per $100,000 invested. The Tiger First Mortgage Program pays 7% per year, paid monthly, on secured, high-value, buildable properties in St. Petersburg, Florida. The investment is for 4 years, paying 7% per year or $7,000 per $100,000 invested. Your investment is secured by high-value real estate in St. Petersburg, Florida. Your investment can be anywhere from $100,000 to $500,000. Do you want to make $1,000 per year on $100,000 invested or $7,000 per year on a secured Tiger First mortgage? The Tiger First Mortgage Program may be just the program for you. The Tiger First Mortgage Program pays 7% per year, paid monthly. For more information, you can call 877-518-9190. That's 877-518-9190.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We've got that resolved with Rose, and ticker symbol here is CCXI, and that is Chemocentrics Inc. So, take a look at it. What a psycho stock this is. Huge gap up back on the trading day of big wide price spread, accelerated volume. Back on October 8th, 145 million shares. But here, if you take a look and you go back further on a weekly basis, you can see this thing had a gigantic wide price spread, only 73 million shares to the downside. That was back in May of 2021. But here's the deal, Rose. If you take a look at the daily and the weekly time frame charts, it's really the weekly chart that I would be watching for. The week of October the 11th was a TD9 count top. The high of that is 1750. I'm sorry. What am I looking at? The high of that is 4216. 4216 is also the top of the weekly profile. So what you need to see is you need to see a close above that. If price closes above that, then that's a signal that price is going to continue to run higher. That's really the signal that the weekly chart is trying to send, or the monthly chart is trying to send to us. This price is well above the top of its profile, and it's also above its oscillator and change line. So your real battle out here is at 42.16. I don't have any clue as to whether price is going to be able to take that out or not, but that is really your battleground. On the daily time frame, you can see at 40.50. That is a bearish structure daily profile, so close above that would be nice, but it's really 42.16 is the number to be watching out there. So thanks much for writing in, and have a great day. So to end the show out here, what are we going to do? We're just going back here to the daily time frames for our 4 equity futures contracts. And then just to restate, the ES Mini still has its TD9 count and Rhodes Momentum Indicator top. Could fail at day end, but it still is in place. The NQ is forming right now a Rhodes Momentum Indicator top. It's got a dark cloud candle. That's a bearish reversal candle. What it hasn't done is broken through a key level of support. That's that green oscillator and change line. The Dow and the Russell 2000, if they did form bullish reversal candles, would form Gartley buy patterns. So the market is as confusing right now as it was to me at 6 o'clock this morning. Sometimes that happens, and when it happens, you just call it like it is. Folks, stay tuned for 2 more great hours out here. I'll be back with you tomorrow at 1 o'clock. Have a magical Monday. Thanks for being here.